despite what Powell was saying. And we've got a lot to talk about. A lot's going on in Ukraine. A lot's going on inflation-wise. We've got Powell talking again soon. He talked yesterday. We're going to go over some of what he said. We're, of course, going to touch on some of our favorite stocks, Muln, Sundial, CEI, BBIG. We'll talk about all those. We've got a lot to discuss. And before we do, I'll give everyone watching a quick update, just in case anyone missed yesterday's stream, just so everyone knows why we're starting these streams a little bit later for the next couple of weeks. Unfortunately, the x-rays at the doctor's appointment showed yesterday I did end up breaking the arm. So it is there is a break there. And unfortunately, for anyone who's curious, it will require a little surgery. So we're probably going to have to do a surgery. We'll see. I'm going to get a second opinion, but unfortunately, that they want to do a little surgery and put some screws in there. So not the best situation, but certainly better than what's going on in Ukraine and Russia, right? I'd much rather have this happen to me than to be in a hospital that gets hit with a missile and something worse happens there. Very lucky regarding what's happened to me, considering what could be going on. So all things considered, you got to practice what you preach. You can't be too upset what happens to you if you're watching every day other people go through stuff a whole lot worse. So good morning, Matt, Niner Zulu, Rocky Mountain Gobbler, Susan L, Charles, Susan, Tomcat. And Tomcat asks, what did I do? Well, I'll tell you real quick before we really get into the market. I was rock climbing, and I completed the little course that I was on. And then when I was falling down, I just fell in a weird way, right? I dropped down and just fell in a weird way, hit my arm, hit my foot a little bit. My foot's not really hurt too much at all anymore, but the arm apparently, that took some damage. So we've got some stuff to talk about in the markets today, all right? SPY, we're going to look at what happened yesterday. You guys are going to see that at 12, when Powell started talking, just a couple of minutes after that, once he was into his speech a little bit, the market started tanking. And actually, let's see how much it tanked by. It was somewhat severe at the time, from the highs of where it was down to where it got. It was down about 1%. And fortunately, since then, it's recovered. And actually, where we're at now is pretty much equivalent to where we were before Powell started talking. So you guys are probably wondering, what did Powell say? Why did the market start moving down? A lot of stocks were starting to take a hit right around then. Okay, so stock futures rise, actually, today. The Dow snaps a 5-day winning streak, and traders weigh Powell's inflation comments. All right, Powell was talking about inflation. We've got the transcript of his speech right here. And basically, he talked about these two things, right? He said, at the Federal Reserve, our monetary policy is guided by the dual mandate to promote maximum employment and stable prices. So he wants maximum employment and stable prices. He goes on to say the labor market is very strong. So, he's feeling pretty confident that he's near maximum employment. Stable prices, on the other hand, right? Inflation, he's not feeling as confident about. If you scroll down around here, this is really what spooked the markets, okay? He says, we will take the necessary steps to ensure a return to price stability. In particular, if we conclude that it is appropriate to move more aggressively by raising the federal funds rate by more than 25 basis points at a meeting or meetings, we will do so. So he's essentially saying that if they end up needing to do 0.5% rate hikes at a meeting or meetings, at multiple meetings potentially, that's not something the Fed is going to shy away from doing. And he continues to say, and if we determine that we need to tighten beyond common measures of neutral and into a more restrictive stance, we will do that as well. So overall, that spooked the markets a bit, all right? They started to get worried that Powell was going to be a lot more hawkish. Now, fortunately, last week when we heard Powell talk, he was relatively dovish, and the markets actually had the best week since November 2020, in part due to what we saw on Friday when we moved up massively. So Powell, in action, is actually being very dovish, right? We ended up seeing only a 0.25% rate hike, despite inflation being relatively high. We got the inflation chart right here. We had a 7.9% reading on the CPI right before Powell's meeting, and he ended up still only doing a 0.25% rate hike on Friday. So overall, his actions are dovish. Now he's coming out with a more hawkish tone. However, this isn't something that the markets haven't seen before, right? We've been living with Powell for years now, and he's always talking about inflation being transitory and the Fed will do whatever it needs to do to maintain price stability. Yet here we are with this massive inflation, and also with a market that's done pretty well over the past 2 years, despite the fact that more lately the market hasn't been doing as well, right? You can see the S&P Despite that, it's still up pretty dramatically if you look over the past 2 years. It's still up quite a bit. And yes, we have declined. It looks like we're actually in for a sharp rebound. Hopefully this will continue. This was, once again, the best week that we saw since November of 2020. So pretty good stuff there already. We've got a lot of momentum pulling us up at the moment. And it looks like we are going to open green. Look at that. We did just open green on the S&P, up 0.38%. And, something that I did want to show you guys, just about how good the markets have been doing the past week. You guys are really going to like the look of this. Anyone who's been invested is really going to like the look of this. Take a peek at this. Markets are incredibly green over the past 7 days. All right, this is a chart, a map of the stock market. Microsoft up 8%, Apple up almost 10%, Google up 7.5%, Nvidia up 25%, Amazon up 13%, Tesla up 20%, Facebook up 13%. I mean, it's just a sea of green, Some of the only red companies, there's a red company in the oil industry, right? Chevron. Oil has taken a bit of a hit over the past week, but even that's on the rebound. So markets, you have to admit, are looking fairly green at the moment. Even today, we're seeing some green in the markets. Now, obviously, some individual stocks aren't seeing as much green. Muln in particular, it's down about 8.7%. CEI is also down a tad. It's down a tad along with oil. We'll take a look at oil. Or actually, oil just flipped green as well, but we'll take a look at that in a second. Going along with the inflation related talks, right? Inflation is probably going to be pretty significant, and it could be impacting some of our favorite stocks, right? Not just some of our favorite stocks. Obviously, the whole world is going to be impacted by inflation, but one of our favorite stocks, Sundial, could be impacted by inflation in a somewhat significant way. Now, we've been talking about this at the next earnings call. We'll see what they have to say. Obviously, Nova Cannabis has released some very good revenue numbers, right? We can see right here, 176% year-over-year revenue increase in Q4 for Nova Cannabis, the company that Sundial is going to acquire due to Alcana owning the majority interest in Nova Cannabis, okay? So Sundial, on the other hand, though, might not be doing great this earnings call or potentially the next earnings call because, unfortunately, of this. Fertilizer prices are at record highs, all right? And fertilizer is probably pretty important for a cannabis growing company, right? This isn't just going to affect Sundial, but it does give them a bit of an excuse to not have their earnings as good as they potentially could, right? This might be something that markets are willing to overlook. Potentially, people will look at this and say, all right, it's a temporary increase in the cost of fertilizer. And here is why fertilizers are costing a whole lot more. I mean, this isn't just going to affect Sundial, obviously. It will likely affect Sundial, but it's probably going to affect food prices all across the world. Okay, so supply shortages fueled by the Ukraine-Russia conflict, along with a host of pre-existing factors, have driven fertilizer prices to record highs. Prices for raw materials that constitute the fertilizer market, ammonia, nitrogen, nitrates, phosphates, potash, and sulfates are up 30% since the turn of the year and now exceed those seen during the food and energy crisis in 2008. So fertilizer becoming incredibly expensive. In 2021, Russia was the top exporter of nitrogen fertilizers and the second largest supplier of both potassic and phosphorus fertilizers in the world. So Russia obviously has a lot of fertilizers that they like to sell and accounts for around 14% of global fertilizer exports. They've suspended their outgoing trade. So they're not sending those fertilizers out anymore. They might be doing this in an effort to punish the world a little bit, right? Obviously, we've placed a lot of sanctions on them. They have suspended their outgoing trade, fertilizer-wise. So we're going to see what kind of an impact that has. Hopefully, it's not too severe, but you will see what happens with it, right? It's obviously not a great situation. Now, furthermore, gas is a key input for fertilizer production, and high gas prices have resulted in a curtailing of production of fertilizer in regions such as Europe, also tightening the supply of fertilizers. So basically, long story short, fertilizers are getting very expensive. That's going to feed into inflation. We're going to see it in food prices. We're going to see it in probably companies' earnings reports. Now, potentially, Sundial's earnings report won't reflect this increase in fertilizer prices because the conflict in Russia and Ukraine and the sanctions weren't ongoing the entirety of this quarter, right? Obviously, this quarter's tracking from the last earnings call to this one. So we're going to see what ends up happening, right? How much of it actually had an impact, how much of the increase in fertilizer costs is actually translated into Sundial's earnings. what we might want to worry about a little bit more is what the next earnings call reveals. Now, overall, I think that this short-term impact for fertilizer prices is not going to be the worst case scenario for Sundial. I think they've got a lot of good catalysts coming, particularly in April when Chuck Schumer says he's going to implement or introduce, rather, some cannabis legalization bills into the Senate. So we're going to see what happens with Sundial. But all in all, I think it's probably decent for them looking over the next couple of months, right? I think they're probably going to see some pretty good stuff despite the rise in fertilizer costs, right? That's probably a more temporary thing while we get these supply chains figured out, while we figure out who wants to start producing more fertilizers and whatnot. We're probably going to see some better stuff coming for Sundial in the future. But right now, it's a bit of a tough time, fertilizer-wise at least. So cost-wise, it's a bit of a tough time, but we all know that Sundial is pretty flush with cash. So I'm overall not the most worried about Sundial. I think they can handle it. But you will probably notice food prices going up in the near future, right? You'll probably see something to that effect over the next couple of months, unfortunately. Not the best case scenario, but that's what we're looking at the moment. So we've also got Fed Chair Powell speaking tomorrow. So tomorrow, Powell is going to talk again. Powell's going to talk at 8 tomorrow. Another speech from Powell. Hopefully it won't be as bad as the last speech that he gave. Hopefully it's going to be something a little bit more positive, something a little bit more dovish. But I wouldn't expect that to be the case. Now you can see the stock market's moving up despite all of what Powell said yesterday. And that overall is a very good sign, right? The fact that the markets are somewhat ignoring what Powell was saying, the fact that despite his somewhat bearish attitude towards the markets, his somewhat hawkish attitude towards the markets, we were able to very quickly rebound from that and make new highs on this uptrend. Very good stuff. So I'm excited to see it. Let's see if we can pull up the market map again and see if we've got the one-day performance. Not quite yet, but we'll see what happens with that sometime soon. Hopefully we'll get something good coming in. But regardless, we've also got a little bit to talk about regarding Russia and Ukraine. Unfortunately, it's not the prettiest situation there, but we do have some decent news, right? So, not the best story, a kind of a tricky story, right? Zelensky says trapped Ukrainians will fight till the end, and the Pentagon says Russians have been flummoxed. So essentially, Ukraine has rejected Russia's offer to surrender the city of Mariupol, and Ukrainians are going to continue fighting, which overall, it's tough if you're in that situation. Do you decide you want to continue fighting, or do you want to surrender and give up to a real menace, Russia, right? So it's a tough situation, but it looks like the Ukrainians are pretty resolved to stop Russia from really taking over. And all things considered, that's really good, right? I'm very glad that Russia won't be winning, at least yet, right? And it seems like, from all that I've read, Russia is struggling to achieve its goals. It's not looking like they're doing all that well. They're having a pretty tough time, from the look of things, taking over a lot of these places. In fact, I read a story, I don't actually have it pulled up, but I did read a story that Ukrainian forces actually retook from Russia a suburb in Kyiv. So they're actually making progress against Russia, right? They're pushing them on an offensive. So overall, it's looking like a situation where Ukraine's not doing half bad, especially considering how small of a country they are and how small their military is related to Russia's, right? Russia has a much larger military, obviously. Now, of course, Ukraine is going to need some support, right? And Zelensky, Ukraine's president, calls for more pressure on Moscow. They want more sanctions on Russia, as Ukraine says 15,000 Russian troops have been killed in total. So that's a pretty significant number. And, I don't actually know how many Ukrainian soldiers have been killed. It wouldn't surprise me to hear that it's a similar number or more. But it's obviously nobody wants any of these deaths. It would have been much better if these soldiers had not been deployed in the first place. But the fact that Ukraine has taken this many soldiers down and hasn't lost yet is pretty significant, right? It shows the strength of the Ukrainian military and the fact that we have been giving them a decent amount of aid, a decent amount of weapons, and a lot of the sanctions that we've been placing on Russia have likely been having a negative effect on their military as well, right? We've heard of supply chain issues with Russia. So overall, things are looking not too bad from the Ukrainian standpoint. I mean, obviously, they're not good at all, but they could be looking significantly worse, right? If you were Ukraine, you might have expected when this whole invasion started, you might have expected a much worse situation to be unfolding than what actually is. It's looking like the situation has not actually been very kind to Russian forces at the moment. So, all things considered, it's a better situation than what a lot of people were expecting. Still not great, though. Now, oil prices, we will talk a little bit about. Okay, WTI crude. Fortunately or unfortunately, it has been going up. You can see this is a chart of the past 5 days, and if we pull over to where we opened up yesterday, you can see that oil prices have slowly been rising throughout the day. Today, they're actually down about 0.66%, and CEI is down about 2%, right? CEI typically moves with oil, so we're going to want to see CEI hopefully moving up in price in the near future, right? We're going to hopefully, if you're in CEI, you're wanting oil prices to go up temporarily. Obviously not over the long term, but temporarily, it would make sense that you see oil prices spike up a little bit, in my perspective, right? Warren Buffett's making that bet as well, buying up a bunch of shares of Occidental Petroleum, a much larger market cap oil stock, and we'll see what happens, right? I'm fine either way. It's not the largest position I've got in CEI, but it is a hedge just in case oil and gas ends up becoming a lot more expensive. Now, we will start to move into what's going on with some of these other stocks. So MULN will look at the chart for the past day. Let's see. We did have a good day yesterday, right? We had a good day. We definitely closed above where we closed the day prior, but we did not close near the highs. Unfortunately, we saw a big rally towards the beginning of the day, up 45%. And around the time when the market started doing poorly, that's when MULN started doing poorly as well. From the highs to where we ended up closing, we were down 22% on MULN. And now from close to where we are now, we're down about 8%. We are hitting up this $3 support level. So hopefully that will hold us. It's not a guarantee. It looks like we did just move through it in a significant way. Unfortunately, the markets are green and MULN is red. That's not the best sign. It is currently the number one top trending stock, the most active stock on StockTwits. And notably, we've also got CEI up there at number 7. So CEI is up there, Camber Energy. We finally got back up on the StockTwits list. So Joshua Harden asks, MULN expectations for today? It's tough to say. I mean, you don't love to see a 22% move to the downside in one day from the highs. It's not the best thing to see. And from the peak of where we were to where we're at now, let's see what we're at. Let's see how much we've moved down. Hopefully not too much, but probably around 30-something percent. 29% is how much we've moved down on MULN. So that's not looking like the best situation. I think a lot of it probably depends on whether or not we're able to hold $3, right? If we can hold $3, then we've still got a chance to continue moving up pretty significantly. If we don't, obviously it's not guaranteed to be over. But keep in mind that a lot of the times you do see peaks with these things. Now, what I will say about MULN is that you might not see a long-term peak for a while, right? Over the long term, we could certainly see MULN move up significantly, right? If you look at where we were just in January, when we opened the year, we were at around $5.25, and we're down still 43% from that level. Even at the highs of this pump, we were down 20%. So we could certainly still see some more upside on MULN, as long as a lot more faith comes back into these growth stocks. And fortunately, I'll pull up the market map and show you guys what we've seen. Right. So over the past week, this is a map of the S&P. But if you look at the full market map over the past week, you can see it's not just these large market cap stocks. It's also the much smaller market cap stocks that are moving up in a somewhat significant way, right? You can see even the smaller squares, which track basically just smaller market cap companies, it's still a pretty significant amount of green in there. There are obviously some red spots, but smaller market cap stocks are coming back in a significant way. Now, I want to show you guys not just the S&P, but also the Russells, which tracks smaller market cap stocks over the past year. Well, I'll show you this. I'll show you the S&P first, right, to compare. The S&P is down from its highs that it reached in January. It's down currently about 6.6%, okay? So the S&P down somewhat significantly. Now, the Russells, on the other hand, the smaller market cap stocks, down from their highs about 15%. So almost 3 times the decrease has been seen in the Russells and smaller market cap stocks. And keep in mind, the Russells is not even the smallest of smallest market cap indexes, right? They're still actually fairly large market cap. So we have seen pretty significant pain for smaller market cap stocks that have been hidden for the most part by these larger market cap tech companies that people view as more safe. And we could certainly see a rise in these more growth-oriented stocks over the next couple of months, especially if Powell doesn't become incredibly hawkish, right? If Powell doesn't really taper down the stock market, then we could really see some good stuff for stock prices. Now, I want to pull up this article that we've certainly looked at before, all right? More than 1/3 of NASDAQ stocks have slumped 50% or more. We've looked at this in the past. We're finally starting to see this begin to turn around after we just had that great week yesterday. 36% of stocks in the NASDAQ have plunged at least 50% from their 52-week highs. Those are mostly smaller market cap stocks. If you look at the S&P, which, a lot of stocks that are in the S&P are part of the NASDAQ, the S&P was not down all that much, right? The S&P overall, because there's a bunch of big market cap stocks in there, were only down, let's see, from the highs to the lows about 14.5%, so not even down 15%, while a lot of stocks were down 50% or more. Now, if you actually look at what we've been seeing over the past couple of weeks, it's actually a pretty good sign, in my opinion. I'm going to look at this, okay? We've been making higher highs, or higher lows, actually. Right here, we hit our first and lowest low on the 24th of February. Then we hit one slightly lower on March 8th. And then on March 14th, we hit a slightly higher low, right? So we've slowly been climbing with these lows, and we just had a big bounce up. We're green on the day. Things overall are looking pretty good. Despite Powell coming out yesterday and having some somewhat hawkish news, it seems like the market is still turning green. And that is exactly what you want to see, right? You want to see the market moving up even when there is a question of, even when there are questions in the market, right? You want to see people not being nearly as fearful. And I think that that is potentially something that we're going to see. Part of it is psychological, right? Part of it is the fact that people have been living in this market for quite a long time. They've been seeing stocks moving down and down and down. They've been seeing them get crushed. And it's just because fear catalyst after fear catalyst have been coming out, right? First, it was people were worried about inflation. Then people were worried about what Powell was going to say. Then people were worried about what was going on in Russia and Ukraine. And you're finally seeing, despite, the continuation of bad news still coming out from a lot of those places, right? Inflation's been moving up. Powell's sounding a little hawkish, right? We just got our first rate hike. The situation in Russia and Ukraine doesn't seem too near to a conclusion, unfortunately. You're still seeing the market move up despite that. And that might indicate that maybe we've hit the bottom, right? That not only does the bad news not make us move down lower, it doesn't even keep us where we're at. It actually allows us to move up stock price-wise, because a lot of stocks have been crushed, right? Not particularly the larger market cap stocks, but a lot of the smaller market cap stocks have been decimated, and you guys are seeing it. Sen is even one of those stocks. CENN, Central Electric Group, it's down a little bit today, but over the past week or so, it's been up pretty dramatically. I mean, it was hitting lows of $1.03 less than 30 days ago, and now it's up at $2.14. So it's more than doubled over the course of the past 15, 20 days. And just over the past week and a half, maybe, it's up, even to where it's at now, about 82%. So a lot of these stocks are moving up pretty significantly. We're seeing some really good stuff for the smaller market cap stocks, especially, okay, the more risky stocks. And that's a really good sign if you're one of those people who's not just investing in index funds, right? If you're investing in more growth-oriented stocks, if you're seeking potentially higher returns, obviously more risky returns. If if you've learned anything over the past couple of months and really the past couple of years, it's that there are stocks that potentially offer the situation where you could get potentially very high returns, but they're also a lot more risky. I mean, you're looking at it right here, right? The Russells, these smaller market cap stocks moved down much more significantly than the S&P, and started moving down a lot sooner. And once again, not even the smallest of the smallest market cap stocks. I mean, you look at a stock like Sen, and you can see a lot of these really got decimated a lot more than the overall stock market. I mean, down from in January, down from $5 to lows of $1. So an 80% decrease just about in some of these stocks. And some stocks saw it even worse. I mean, Muln, take a look at that one. Over the past, we'll pull out the 1-year chart. In January, 5-something, all the way down to 52 cents, a 90% decrease in this stock price. It's pretty dramatic stuff, what we've seen for all of these stocks. So unfortunately, a lot of stocks have seen quite a bit of pain, but notably, there is a lot of green over the past couple of weeks. So we might be at the end of this thing. If there ever looked like an end, right? Look at the chart on Sen. Look at the chart on Muln. Finally, after months and months and months of red, you're finally starting to see these stocks move up and move up in significant ways. So we'll see what goes on now. Firestorm Goku, give us the slick hair back. Lose the hat. I definitely would. I wish I could. Unfortunately, with my arm the way it is, it's a little tough to actually use a blow dryer, and the hair just gets too crazy, right? It's too wavy and just messy, and it gets all over the place. So for the next couple of weeks, unfortunately, we're going to have to wear the hat just to keep it out of my face and keep it under control. But yeah, just for anyone who's curious, here we got the arm. We'll pull that up right there. Pretty significant broken arm right there. So hopefully, the surgery will hopefully be getting that in a situation where it can heal up quite nicely, where I'll have a full range of mobility and whatnot. There is some risk that it might not have full mobility or a full range of mobility, unfortunately, in the elbow, even after the surgery, the doctor said. So it's a pretty serious situation. But hopefully the doctors know what they're doing. Hopefully they can deal with it. But regardless, it does not hurt too much, guys. So don't worry about that. Don't worry about the arm. It's already got a decent amount of mobility as it is, and it's only getting better day after day. So we'll see if the surgery really helps make things even better with that. But I do want to talk about crypto a little bit. All right, crypto, it is also going up along with the market. We're seeing really good stuff. So $42,890 is the price of Bitcoin at the moment, up 3.66% on the day. Ethereum also up 2.5%. BNB up 3%. A lot of these cryptos are red, and in somewhat significant ways, especially over the past week. They've been following the trend that the market's been on. A lot of these cryptos are moving up, all right? People are moving away from fear mode, right? They're getting out of cash. They're getting back into assets. A very good sign, all right? Cryptos are typically doing pretty well during times that the market's doing pretty well. It's tended to be the case that they soar while the market soars. And you can see, we'll actually pull out the all-time chart and see if we can zoom in a little bit here over the past 2 years, just about. Cryptos have typically done pretty well when the market's been doing good. And over the past couple of months, cryptos peaked in November. That's when a lot of smaller market cap, riskier plays ended up moving down as well. And I believe that's because, cryptos are viewed as somewhat riskier assets. And there are a couple of reasons for why cryptos might have moved down. Obviously, the Fed tightening was a big negative catalyst for cryptos because there'd be less money in the system, less money thus to pump into cryptos. So obviously, there was going to be some fear around that. And since November, we've really seen not just cryptos, but growth stocks as well take a huge nosedive. Now that we're seeing good stuff for cryptos as well, it could be a good sign for the markets, right? We're obviously seeing a lot of stocks performing better over the past week. Cryptos are performing better over the past week. Very good sign. It's like all the stars are really aligning exactly where we'd like them. And it's looking like we could be in for a very bullish next couple of months. I mean, we really could be. It's not a guarantee, but if there were ever a good chance of us seeing some positive price momentum, I mean, this is exactly the kind of sign that we would be waiting for. I mean, look at this bottom left chart of Sen right here. Look at that. After months and months and months of big declines, we're finally starting to see basically, at the moment, it looks almost like a straight line up. I'm sure it won't be as steep as that over the long run, but we'll see what we can get on these kinds of stocks, right? Hopefully, they'll provide us some pretty significant upside. I mean, we're seeing something similar in Muln as well, right? We're starting to see over the past couple of weeks, it's been rising significantly. CEI obviously rising for different reasons, oil-related reasons, but overall, things are looking not half bad. We are seeing a rise there as well, and the S&P even has been doing pretty darn good. So all things considered, the stars are really aligning exactly how we'd like them. You can never tell exactly what's going to go on in the stock market. It's pretty much impossible to say exactly where stocks are going to be going in a short period of time. But if we ever had a good sign that things were headed in the right direction, this would be it, right? You'd want to see, despite bad news coming out, markets moving up. Despite Powell talking about being a little bit more hawkish, people are still deciding to buy stocks. We've seen a big sell-off. Despite bad news coming from Russia and Ukraine, we're still seeing people buy stocks. We're seeing cryptos move up. We're seeing the smaller market cap stocks especially moving up, right? Riskier stocks are moving up more than overall indexes, right? So really good stuff. It's exactly what we want to see. And looking at the market map, finally, we've got this market map out for today. You can see it's a pretty green day in the S&P, right? So the S&P is looking pretty good. Banks especially are looking pretty decently. Oil and gas aren't looking great on the day. Obviously, oil and gas, the price is down just a little bit, down 0.26%, unfortunately. So it's not looking like the best situation, but all things considered, the overall market's looking pretty darn good. So oil and gas, we'll see what happens with it. That's more so just a hedge that I want to have in CEI, just in case we start to see some bad stuff. But hopefully we'll see really good stuff going on in Ukraine and Russia. Hopefully the conflict will be ending sometime soon. It's looking like a tough situation in there. Nobody really wants to give up. Russia and Ukraine, both of them are holding pretty staunch. And look at that. Silver back in the chat. Morning, regulators. Been away for a few, getting things in order for the storm that's coming. Oh, boy. Oh, boy. Hopefully it's not too big of a storm. Hopefully it's a storm that launches stock prices pretty high. We'll see what happens with it. I'm hoping for not too big of a storm, but obviously it doesn't hurt to have hedges, right? Particularly, obviously, we've been talking about CEI being one particular hedge, right? That is a hedge. In the case that oil and gas prices continue to rise, CEI would potentially be on the rise as well. But also gold and silver, which unfortunately, for anyone holding gold and silver, haven't been doing great over the past week or so. As stocks have started to really come back, people have become a bit less fearful. Gold and silver have moved down. But it's not the end of the world for gold and silver, right? If things take a turn, it doesn't hurt to have some money in some alternative assets into some hedging positions, and you could potentially be making a pretty penny. In gold and silver if things start going the wrong way for the world. Now, overall, obviously, I'm hoping that stocks end up doing pretty decently, right? I'd much prefer stocks typically have more upside than these larger assets, and one of the reasons why we'll pull this up. So we've got the assets of the world ranked by market cap. It's tough. You're going to see it's tough to move gold, right? Gold is a $12.23 trillion market cap. Silver is a $1.47 trillion market cap. And Bitcoin, 800 billion. So, there's a lot of stocks that are above the price of silver market cap-wise, but none of them come anywhere near gold. It's very tough to move gold up in a significant way. A lot of people have gold. There's a lot of liquidity in that market. And it's not a bet that I'm unwilling to take, right? Obviously, I'm willing to hold some gold, and particularly gold mining stocks that have their own reserves, just in case we do end up seeing some kind of negative situation for the world and gold does end up moving up significantly. I'm obviously willing to hedge against that possibility by holding some gold and some silver. Particularly, though, the stocks that mine those assets I'm more interested in, because those are revenue-generating companies, right? They're the best of both worlds. They not only have gold and silver reserves, but they've also got cash flow, right? So they're making money. And one that I've gotten invested in more recently, you guys are asking about it, HYMC, Hycroft Mining. This one is one that's been bought up by AMC. So not all of it's been bought up, right? About 22% of the shares have been bought up by AMC. We could see some apes coming in. Now, it's not been looking great for this stock. Unfortunately, it has been moving down just a little bit. Day after day, it's been sinking and sinking. Now, I don't think we'll get as low as we were, probably, right? It's obviously seen some good momentum, and we're probably going to hear some good future growth projections at the upcoming earnings call, is what I would expect. But we'll see what goes on at that earnings call, right? We're currently looking at it being on the 28th. It looks like they moved it back a bit. I believe it was meant to be on the 23rd, if I'm not mistaken, but now they're saying the 28th. So the 28th is the HYMC earnings call. We're going to see what kind of results we get. Once again, we've talked about this a little bit. I wouldn't expect the best results for this quarter because they did at the last earnings call announce a cut to a lot of their operations, right? They were going to be cutting their operations, their mining operations a bit due to not having enough capital. They'll probably, though, with the new influx of cash that they've gotten from AMC, be able to announce some big growth in the future, though. So they'll probably say, while we haven't been doing much mining as of late, we're going to do a lot of mining in the future, really ramp up production of gold and silver. Obviously, gold and silver, if you look at the charts over the past year, the price has been going up and up. So we're even now sitting above where we were throughout pretty much all of 2021. So things are looking pretty good for gold and silver at the moment, and thus good for HYMC. So that's another one. Just I know a lot of people were interested in that. We'll get some more info on the 28th about what's really going on with this stock and what their growth might look like. All we have to go off of at this point is what they said at the last earnings call. And, a lot's changed since then, right? They got a big influx of capital. Obviously, they're probably going to want to pick up their mining operations a little bit. That's the main reason why they did decline so much. They announced the halting of a lot of their mining operations and how they were processing their ores. So we're going to see what happens at this next earnings call on the 28th. But that's what we've got in the market for today. Thank you guys for joining. We are going to be doing these streams every morning, 5 minutes before market open. We're going to start these streams, so 9:25 on Eastern time, I guess 6:25 on Western time, and wherever you are across the world, feel free to tune in whatever time you're watching. So other than that, guys, thank you for joining. It was a great one, and I'm looking forward to seeing you all, hopefully for a very green day tomorrow. So I'll see you guys next time. All right, bye.